Hello and welcome everybody. This week introducing two lawyers from Luxembourg who were going to start a podcast series with me actually, and we will do this about living and working in Luxembourg, law, living and working in Luxembourg. But we were hit by the left field with the coronavirus, and one positive of that is that we can actually visibly see our two lawyers. So let me introduce them to you. First of all, let me introduce Louise Benjamin. Now, Louise Benjamin is of Benjamin Law Firm. She grew up in Guernsey, the Channel Isles. She has 3 young boys and married a Luxembourger, living here for 18 years. Louise is a British solicitor and also here in Luxembourg an avocat le coeur. She doesn't claim to have so much free time with 3 young boys and a full-time job, but she also does work hard to raise funds and awareness for the business school for the slums LP4Y, and we will link to that in the article.
Thank you.
Joining us also is Graham Wilson of Wilson Associates, also born in England and has lived in Luxembourg for more than 25 years, gaining Luxembourg nationality. Graham is an English barrister and also an avocat here in Luxembourg. Aside from work, Graham, you like old cars and cats, so welcome to you both.
Thank you very much, Lisa.
It's wonderful to have you both here, and actually today we're going to start with something fairly serious. We've seen what coronavirus has done to us socially. We're all experiencing that. We're also experiencing the financial, economic implications. And as a consequence of all of this, something that hasn't really been spoken about, but is very possible for many people in different ways, is bankruptcy. So that is going to be the theme for today. And Graham, I'd like to start with you, which may seem like a simple question, but in fact, once you dig into it, it isn't simple at all. Can you explain here in Luxembourg what bankruptcy means?
Well, Lisa, you certainly threw us right in at the deep end. Yes, with a very, very emotive and very difficult word. Well, yes, we can jump in. I mean, let's be clear. We're not giving, although we're both lawyers, we're not giving legal advice. You may need to go to a lawyer or other professional in a specific case. But let's start off then with one small legality. What does it mean to be bankrupt? Well, it's actually a twofold test in Luxembourg. First of all, its situation has to be where, for example, the company is unable to pay its bills, pay its debts as they fall due. So can't pay its salaries on time, can't pay its rent on time, can't pay a telephone bill on time, can't pay its suppliers on time. Any time when it has a bill which is due on a particular date and is unable to pay at that time. And second requirement is, second part of the test, is that the company is no longer able to obtain credit. In French, they say that the company has suffered an ébranlement de crédit, can't obtain further credit from a bank, from its suppliers, from its customers, from friends and family, from its shareholders. Anyway, if you have those two conditions fulfilled, then the company is technically bankrupt. And we'll talk a little bit about what that entails. But the important thing to remember is that when you reach that situation, the law requires that you do something within 30 days, within 1 month. And if you don't take the necessary steps within 1 month, then there can be significant consequences for example, the directors of the company. During the coronavirus crisis, that 30-day period has been extended, like many formal delay periods in the law that have been postponed. The 30 days for declaring bankruptcy has as well. But let's have a look at what happens typically for a company. It may be interesting, before we start that, to look at a few figures. The latest figures that I've got available from Statec are actually 2018. In 2018, there were almost 1,200 company bankruptcies. That compares with just over 900 in 2010, which of course was also very shortly after the 2008-2009 crisis, and just 675 in 2005. Another interesting comparison is perhaps that, and the only year I've got this for, the latest year I got this for is 2017. In 2017, there were a total of just in excess of 3,500 company formations in Luxembourg, and there were 2,800 closures, of which 900 were bankruptcies. So in terms of company formation and closures, which are, one might say, voluntary closures, but anyway, certainly not bankruptcies, we're getting 80% of formations lead to a closure within a relatively short time. But the bankruptcies were over 25% of total formations. Now, those figures are, one can say, a little bit alarming. Now, we're actually going to look at 3 different types of bankruptcy. And we'll probably do it, I think, over 3 podcasts, Lisa. We'll see how that goes for timing. Today, we're going to look at bankruptcy of a company. Later, we will look at, in another podcast, bankruptcy of a sole trader, so someone carrying on business not through a company, but in their own name. And then thirdly, we will look at bankruptcy of people who are not carrying on commercial operations. So in other words, an individual who has just being submerged by economic circumstances.
That's
very, sorry.
Just to repeat that, we will probably break this up because they're all rather intense and they're all slightly different and not necessarily too obvious to somebody coming into this for the first time. It's not what you think about when you're in a company. So we have, just to reiterate, 3 types of bankruptcy. Number 1, today we'll look at bankruptcy of a company. Secondly, that of a sole trader, and thirdly, of an individual. And there are many points made, not least of which that bankruptcy is rather a relatively common occurrence, and that we're in this slightly grey zone where there are some government handouts being offered, and when one thinks they might become bankrupt in a period of already quite immense stress upon them, that's very difficult to figure out on one's own.
Indeed it is. Let me, again, we've said a couple of times now that we're not really giving legal advice, but one thing you must bear in mind, and we're talking obviously to English language customers, clients, viewers, that's right. We're operating the civil law system, not the Anglo-Saxon system. So in the civil law system, there is an important distinction that's made in Article 1 of the Commercial Code, and that is that you are either, if you are carrying on business, you are a commerçant, you are a commercial person, and that is different to a non-commercial person. And only a commercial person can go bankrupt as a company goes bankrupt. An individual who is not a commercial person cannot go bankrupt. Now, we use bankruptcy as an easy word to use in English, but the word for an individual who is not a commercial person, who is unable to meet their obligations financially and decides to take, or is forced into the very unfortunate step of becoming bankrupt, it's actually known as déconfiture in French. But we'll come on to that probably in podcast 3. So today we're going to concentrate on bankruptcy of companies.
I just wanted to ask about the sole trader.
Yes.
Which category of the 2 that you've mentioned would they come into?
They're a commerçant. So they are treated in a way it's very similar to a company. And it's not exactly, and there are also a number of special cases, which we're not going to deal with in these podcasts. I mean, this is a very difficult and technical subject, and of course it's very economic as well. But when you have liberal professions, doctors, lawyers, architects, bankruptcy in those situations is difficult as well. And also you have, for example, non-profit making associations, charities, if you like, the ASBL, the bankruptcy of those. In other words, where they are unable to meet their financial obligations, that again is different. But the key elements that we see in the bankruptcy of a company and are mirrored in the other situations. The other thing I would like to say here is that bankruptcy is a very, very stressful situation. The psychologists compare it to losing a loved one, death of close family member. It's something
COVID-19. Yeah.
Yes.
COVID-19, yes.
Exactly. Well, yes, it's losing your job. But I mean, people who create their own companies or who are sole traders, they are often so not only financially involved in their business, but they are emotionally involved in it as well. It's something they have created, they have built up. And therefore, please bear that in mind. And if you are, financial difficulty is one thing, bankruptcy is really the last resort. And if you are getting into difficult situation, do not be afraid to ask for help and assistance. And even if you are, even if you are forced into that step, it's wise to have someone who can help you, someone who can bring a perhaps a little more objective view, because can be so tied up in it yourself, and the emotional stress and the time it takes can be very difficult. So get some help.
On that point, actually, I just jumping in, and sorry to interrupt you, because I'm allowing you a big space to talk here, because it is so technical and you have all of the knowledge. Who should one ask for help? Because if you're in that situation where you're in such financial constraints, a person might not want to seek legal advice because it's not always free or easy to know even whom to go to. So is there anyone you would recommend they go to see in that first instance where they're beginning to think this isn't looking good?
Well, obviously, I'm a lawyer, Louise is a lawyer, we're a little bit biased. I mean, lawyers do not have to be expensive, and there is a certain amount of aid that you can get, although that's very difficult in commercial situations. If there is a bankruptcy of a company, for example, it's very rare that there's nothing there. And often what's happening is it's a question of which creditors get some money and which don't. When a company is put into bankruptcy, then the court appoints someone who's called a curateur. And the curateur, of course, gets paid out of the bankruptcy. But aside from that, there are places where you can get very good and free advice. And obviously, one thinks about trade associations, Chamber of Commerce. You can even talk to your bank about it. Remember, they have a clear conflict of interest. Family members, friends, but yeah, trade associations, maybe for individuals, trade union or whatever, but there is assistance that is available. But remember, the one thing you do get with a lawyer is that is someone who is absolutely on your side. And everything that you discuss with the lawyer is completely confidential. And that's not always the case. I mean, you could also go to your accountant, your tax advisor. It is going to cost something, but it doesn't have to be a lot of money. But you really do need to look at it very carefully to make sure that you don't fall into any of the traps that are out there. I mean, when we come to talking about individuals, I think that's completely different. That's very different, and there's more available, more assistance available. But of course, if you're a business, you're the kind of almost the target of the bankruptcy, and it's not always the case that people are looking in a kindly way towards you. But in any case, if the company cannot pay its debts, then that's one of the conditions, obviously, about being forced into bankruptcy and cannot get any credit. That's one thing. But that's when you have a kind of, if you like, voluntary bankruptcy. But I mean, it's voluntary in the sense that you, as a director of the company, or the company itself, through its directors, has to go to the court and say, we meet these two conditions, we need to be made bankrupt. We can't go on. But the other situation is where you can be forced into bankruptcy, and that is a creditor who is unpaid can apply to court as part of the debt collection procedure, and if you can't be paid, can force the company into bankruptcy, either voluntary bankruptcy or forced bankruptcy. The result technically is the same. The court will appoint what in English we would call a trustee in bankruptcy. Here is called a curateur. And that person, who is often, but not always, a lawyer, will take over the direction of the company. The directors of the company technically stay in place, but they have no longer any powers. And the trustee in bankruptcy will, subject to the control by the court, supervision of the court, seek to realize the assets, whatever assets there are, use the money that it realizes to pay off the creditors, for which there is certain priorities. There may be secured creditors and others. Well, by definition, it's going to be insolvent. So there almost certainly will be nothing left for shareholders, and the creditors we expect and we see in practice, that they don't get 100 cents in the euro. They get something less. If they're lucky, they might get 99, or if they're unlucky, they might get only 1. But that's the nature of the beast, I'm afraid.
In this situation that we find ourselves in now, where so many businesses are facing difficulty, and the government here in Luxembourg, across with many governments around the world, have been very generous in changing laws rapidly, helping. There are various options available to various sizes of businesses, and there's also loans available. A business might not be able to know what its future, they don't know what they're about to go into. So what length of time have they got to figure this out now? It was 30 days prior to COVID-19. What is it now?
Well, Louise will come on to that a little bit more about, because when we're looking at the 30-day period, you already know not only that you're in trouble, but you are in deep trouble. I mean, that's why I'm saying a few other things here, but you can do before. But the question as to, because, you know, companies draw up their annual accounts to a certain date, and the accounts are prepared after that date. It's not just once a year that you look to see whether you can pay your bills and whether you have further credit available. I mean, it's basically on a day-to-day basis. You've got this 30-day window. And therefore, you have to be looking at running your company in a way that this information is available. But, I mean, small business people, they know that you can see which way your company's going. If you don't have customers coming in the door, if your customers are late paying and your suppliers are chasing you, you know, this doesn't go from one moment to the next.
My point is that's the case now for very many businesses. And
well, it has gone from one day to the next, hasn't it? I mean, if you run a small restaurant or a cafe, you know, you've got no customers, and you may have rent to pay, and you've laid off your staff. But yes, it can go very quickly indeed. Now, the other thing that it's all well and good that we have the financial assistance that is available. I mean, and I think in general the state has done a very, very good job. But there are obviously there are grants, and the fact that you have staff that are on chômage partiel, whatever, is excellent. But a lot of the money that's available comes in the way of loans. And maybe, well, we're starting even from next Monday, or already started to have some lifting of the restrictions. But it's nice to take a loan to get the cash in the bank, but then if you have to repay it, and okay, the terms of the loan and the repayment period is still to be defined, but can you be sure that your business is going to be able to do that? And it's not easy. It certainly is not an easy decision. But if we take a step back, I mean, today, for example, what should you do before you're forced to take the formal steps to bankruptcy? Well, one of the things you could do, and you have to decide, do you really want to continue? Perhaps it's best to stop before you're forced to. You could simply decide you look at the way your business is going, you don't like the look of the business, you see nothing but storm clouds ahead, and you don't want to live through that, and you don't want to lose whatever it is you have built up. You may say, well, I think it's time to stop. Voluntary liquidation, completely different to a forced bankruptcy. Voluntary liquidation, where the liquidator is appointed by and is ultimately controlled by the shareholders. And in a voluntary liquidation, I mean, the assumption is that, well, the starting point has to be that you believe that the assets exceed the liabilities. But there's a lot of things that a lot of strain and stress that you do not have. And it's under your own control. I mean, when you have a curateur appointed by the court, it's out of your hands. I mean, there's certain steps you can take if you think the curateur is not doing things correctly, but in reality, little chance to do that. So if you really don't like the way things are going and you do not see the tunnel, never mind the light at the end of the tunnel, maybe it's time just to say, okay, fine, this has gone far enough, and we'll do something else. There are a number of formal, legally mandated procedures that can be used by a company which foresees having problems. And the idea is to try and give the company time to rectify its financial position before it runs out of control and is forced into bankruptcy. I mean, in Luxembourg, there are at present 3 possibilities. One is called controlled management, gestion contrôlée. A second one is called composition or an agreement with your creditors. And thirdly is a suspension of payments or a sursis de paiement. All of those three systems require an order of the court. So you have to make an application to the court. And all three procedures require a majority of your creditors to agree. In the case of control management, it's 50%. In the other cases, it's 75% of your creditors. Because essentially, in these circumstances, it's the creditors who are not being paid on time, the expectation being they'll be paid at some time in the future, or they may be asked as part of these three positions to actually agree to reduction in the amount that they're owed. What sometimes is referred to in the trade as the creditors agree to take a haircut. In practice, all these procedures have not proved very useful. They're not terribly, principally because they lack flexibility, they have a relatively high cost, and the simple fact that a company applies for one of these procedures is like a sign to a market, its customers, suppliers, oh, there's a problem, and it can drive the business into a worse situation. The weaknesses in the current system are very well recognized, and there's a major modification in the law which is proposed. There's a projet de loi, a draft bill, number 6539, which dates already from February 2013. In other words, it followed on, its motivation was in the 2008-2009 crisis. But it's had a very, very difficult gestation period, which is a reflection of the fact that there are it's difficult, a lot of competing interests, and who bears the brunt of a business that's really in difficulties.
So you've had this proposal, the gestation period has been since February 2013.
Yep.
So how are you dealing with that?
Well, I mean, it's a proposal at the moment. We've just got the old law. I mean, until this is a new law, it won't have any effect.
And from your point of view, just on comment, what would you like to see happen in your experience?
Well, you know, I think it's very, very difficult. I mean, everybody who watches television, they see references, or American television, they see references to what they call Chapter 11 bankruptcy, where companies are put into this Chapter 11 of the Consolidated Bankruptcy Act, provides a provision whereby the company can continue to work. But again, the question is, who bears the losses? Is it the shareholders? Is it the creditors? Is it the employees? Is it the pension fund? And this is a political and economic question, a very,
the government.
very, very difficult.
Yeah.
So, you know, it's a modernization of, right, that, in my notes, it now says Louise. So that's certainly more than enough for me for the moment.
Hand over. Graham, thank you so much for that very detailed introduction to what is an incredibly sensitive and difficult, emotive subject. Louise, turning to you now, I believe you're going to talk to us about the director's responsibility in this situation.
Yes, so I wanted to talk about director responsibility because at the moment, during COVID-19 and the after effect of COVID-19, we need to be, as directors, we need to be acting with prudence and diligence, as we were in the past, but even more so. And I just want to recall that two-part test that Graham mentioned right in the beginning. Can the company meet its debts as and when they fall due? So, you know, you get a bill and can you pay it? And can the company still raise credit? So let's say you can't pay your bill, can you still get a loan from friends, family, or a bank? And perhaps during COVID-19, there's some government loan that you could get. And so that is a test that we must be constantly asking ourselves as directors. And so how are our duties evolving as directors? So in Luxembourg, you would normally go for a sort of a long-term view, look at the company now, but also in the future, to see where the company is going for every decision that you make. But during COVID-19 and probably in the months, possibly the next couple of years to come, you need to also, as a director, consider the shorter term. So You need to focus on perhaps refinancing the company, renegotiating payment terms. For example, can you just open your shop on a Saturday and mornings because you don't want to pay staff to staff it for the whole week? Things that you wouldn't have been able to ask for before. These are short-term requests, because normally, say, a shopping centre or the landlord would have certain rules in place, but you need to be thinking, can I actually abide by these rules? And if not, maybe I should be approaching the landlord or the shopping centre and asking for different terms, or if you're running a small business, renegotiating with your creditors to pay a bit less or to pay on a different date. Perhaps you need to sell some of your assets, even just to pay your salaries going forward or to pay the social security going forward. Thinking about keeping the business afloat in the immediate future, if of course you've taken the decision to continue. Then from a good corporate governance point of view, you also need to keep good memorandum. So write some memos, write some notes and keep them. Write some board meetings. So perhaps if you're the only director, if you're a sole director, then just make sure you've written memos. And if you're a board directors, then make sure you hold regular board meetings and that you just note everything that you're doing, just to A, demonstrate that you're doing the right thing, and B, to sit down and think about it and say, should I be going into bankruptcy proceedings, or can I avoid bankruptcy proceedings? And then if you are in a situation of financial difficulties, there might be extra duties. You might, Graham mentioned that you have annual accounts. Perhaps you need to be doing monthly accounts. Perhaps you were doing them anyway. And then perhaps you should be evaluating your the value of your company. Perhaps you've lost half your equity, in which case you need to go to the shareholders and ask them, can I keep this company going? So I've lost more than half my share capital, or perhaps in fact I've lost 3/4 of my share capital. So you need to look at the law and think, am I allowed to carry on or not? There is a 1 month deadline normally for filing for bankruptcy proceedings, but that has been extended because of COVID-19. But maybe the courts are going to be reopening fully soon, so let's not rely too much on having extra time. Let's moving on to director's liability. So the situation in ordinary times, or when you have financial difficulties, is a little bit different. In ordinary times, a director might be liable if he's made an error in discharging his management duties that a normal, prudent person wouldn't have done if they were placed in. So they make a decision which a normal, prudent, diligent person wouldn't do if placed in that same situation. But in the situation of bankruptcy, where you're concerned about the future of your business, think about things like paying VAT and Social Security. I think the idea behind it is that if you collect VAT, it doesn't really belong to you. It doesn't really belong to your business. It belongs to the state. So make sure you pay that VAT to the state. Of course, at the moment, you might be able to ask to pay it a bit later, but that doesn't mean that it belongs to you. And the same with Social Security. If you're paying Social Security for your staff, you might not pay any extra liability for paying it a little bit late, but it doesn't mean that you can't pay it. And if you don't pay it, the Social Security or the VAT to the state, you could have a personal problem. You could end up with personal liability. You could be joined into any bankruptcy proceedings.
That brings in a personal part to this, a very personal liability part.
Exactly, yes. Ordinarily, you would only be joined to the bankruptcy proceedings if you've committed a gross negligent act. But for me, the VAT and the Social Security are important to pay, even if there are some possibilities to delay payment at the moment. For me, that would personally be a priority.
It sounds like it would be a sensible, just as an aside thought, for companies to have separate bank accounts, to pop that directly into a separate bank account at point of collection from invoicing.
Why not? Yes, why not? Yes, I mean, I think the thing is right now you might have a cash flow issue and you might need to take that money to use it to pay something else. But be extremely careful. Only do that if you know that you can pay the Social Security or VAT later. Otherwise, you could get personally joined in. This has been something that's going on since I think 2015 or 2016 with the courts, where even companies have been put into judicial liquidation because they haven't paid their duties.
Sorry to interject, but it's actually worse than that. That we have a situation over the last few years where the tax administration, Social Security Administration, VAT administration have pursued directors individually because the company has not paid over the VAT, the Social Security, or the salary tax. Because of course, when the employer deducts the salary tax when he pays an employee, that's actually money that is paid to the state on behalf of the employee. It's the employee's tax liability. And the state has pursued directors even without the companies being bankrupt.
That's right.
So
yeah.
that's a hot topic in bankruptcy, but that's a hot topic outside of bankruptcy. Some people might think it's a little bit.
Well, perhaps they're going to be a bit softer at the moment. They are acquiescing and allowing people to pay a bit later.
Oh, well,
yes. You were not going to get interest on your late payment of your Social Security, or but still, I would prioritize that. Also, be careful that you don't use any assets of the company for yourself, or that you don't carry on a loss-making activity, hoping that you might personally benefit. So you're hoping that you're going to be able to pull a big amount of money out of the company, so you allow it to continue when you shouldn't be. And because there is no reasonable chance of avoiding bankruptcy, be extremely prudent, because that could be a reason why you are personally pulled into the bankruptcy and personally liable for the assets of the company. Then
again, I mean, a lot of these are ever so slightly grey areas, because personal benefit could mean a variety of different things. But I suppose you have to be able to justify any action you take as a director during this time.
Exactly. You need to. That's another reason why I say write a memo, write a note. If you haven't got time, whilst you're on the phone to somebody, write an email and send it to yourself. Anything to document the actions that you're taking, so you can go back and explain afterwards why you did it. Because hindsight is a great thing. It's easy to look back at before COVID-19 and think everything was perfect, or to look back at the beginning of COVID-19 and think, well, I should have known. But I think we were all in shock in the first couple of weeks of lockdown, and we couldn't see the woods through the trees. The other thing is, if you are personally involved in a bankruptcy, if you're personally liable, you might have a problem to work afterwards. You might not be able to get a trade permit. There are certain commercial activities where you wouldn't be able to undertake them if you've become personally bankrupt.
Well, this is very important. I think that's something that a lot of people would think about. It's that kind of stigma of bankruptcy, and it's something that everybody needs to know about. What does it mean afterwards? And that's where perhaps that voluntary liquidation would be a better move if that was an option at the time.
Exactly. If it's an option at the time, or if you can discuss with your creditors and then do voluntary liquidation, that could be an easier option. But you were talking about the word stigma. We'll talk about the individual bankruptcy then in a future podcast.
I just wanted to mention a couple of things which you had brought up, Louise. Coming to taking notes about what happens. If you have legal difficulties in relation to a corporate or personal bankruptcy, of course, they will play out over time after everything has happened. And so as Louise rightly said, everything is looked at with hindsight, and it's very, very easy in sitting quietly in 2 or 3 or 4 years' time in the future, look back and you can have your actions criticized. So one should stress then the idea of the fact of taking notes. When you're looking at the viability, the ongoing viability of a company, there is something which is often referred to by financiers as a stress test. It's nothing to do with what I was saying earlier about the personal stress on directors of companies. But the stress test is saying you look at the situation of your company today, and you say, what could happen to it? So if you're a company that's living on rental income, say, what if our rental income was cut by a third, 50%? What if we have a bank facility that's going to be renewed in 12 months and it's not renewed? In other words, you ask yourself some theoretical questions and you work through the figures, and you see if your company can continue, your business can continue in stressed circumstances.
So you need to make what you're saying is make a contingency plan.
Well, it's not even a contingency plan. It's saying, okay, this is where I am today. How bad can it get? And if it gets this bad, I need to. So before you get to day 29 of the 30 days when you've got to go to court, you should be thinking 3 months ahead. I don't think I'm going to see out the quarter, or I need to do something serious. And how do you do that? Well, you say, okay, I use my imagination. I say, how bad could it get if I've got if I've got to pay my rent, but I've got no income? How long can I go? Can I go 3 months? Can I go 6 months? Whatever. But what the financiers normally call stress test. You've probably heard it in relation to banks after the financial crisis. They talked about the bank regulators said, yes, they've done a stress test for the banks, and they see that. That they see that 50% of the loans are non-performing, interest rates have gone in this direction, etc., etc. Can we continue? Force majeure. Well, if coronavirus isn't force majeure, then yes.
What is?
So in English common law, you don't have force majeure. In other words, an extra act of God. You don't have an external action which has completely destroyed the underlying basis of your contract. In the civil law in Luxembourg, in the civil code, you do have a provision for force majeure. So this is in relation to the contracts that you have and the circumstances when you look at what's happened and what does that mean for the contracts you have. Can you terminate them, bring them to an end? Well, basically terminate them, but does it mean that you can renegotiate? Because you have this absolutely unforeseeable external force that or activity which has caused irreparable damage to your company, or has basically changed the nature of the particular contract. So yes, that is something that's kind of before you get to bankruptcy. If you have onerous contracts, one of the things say, well, I need to review my contracts. Can I get out of them? Can I, and even if it's not absolutely clear, at least maybe you've got an arguable case. You can go back to the counterpart and say, listen, I'm going to invoke force majeure. Maybe can we not come to an arrangement here? I've got one particular case that I'm thinking of, a client who is a major investor in shopping centres. And what they've said to all of the shops is, you just pay 50% of your rent. I mean, I don't even know why the shops pay 50% because they've got no customers, but pay 50% of your rent, and the other we'll talk about you repaying it in 2 years' time.
Well, that's a wait for 2 years' time, like Louise.
Exactly. I mean, you've still got to say, I think it's going to be okay in 2 years' time.
Here in a situation where this terrible situation of bankruptcy, we can all see what's not happening right now. We're all living it. We're here talking over Zoom, and we can see that so many industries and businesses have been affected, but we're stacking up problems for, like you say, 2 years down the line potentially. But I'm also thinking, as you talk about trying to get out of some potential contracts one has with organizations or work contracts, it's also making me think about insurance companies and how they might be able to either help a business or get out of a clause as well.
Yes, well, I think it's really important to negotiate or renegotiate all your contracts if you have difficulty to pay them. And you might find yourself in a better position than you were before, because you can say, for example, with the landlord, you can say to the landlord, I'm not paying, or I'm paying only this amount, or I'm only going to open my shop from this time to this time, and not what you are telling me. It does put some people in a stronger position, but then don't forget also that the landlord also has liabilities. You don't want the landlord to go bankrupt either.
But in the sense that some mortgages, if they have a mortgage,
That's right.
on hold for a while, again, that's another other problem to come in the future. So just to summarize then, I know we have so much more to talk about when it comes to sole traders rather, and also individuals, but are there any kind of questions that you often come up with, you know, in your professions, that people come to you and say, what should I do in this situation?
Well, I suppose people are going to say, can I pay myself salary still as a director? Can I pay myself a bonus? Because I was meant to get a bonus for the end of March, and that covers a previous period of time where the bonus was due to me. Can I pay it to myself? And Graham, you'd probably agree in saying, no, it's better not to. It doesn't look very good, especially if you went bankrupt straight afterwards.
Well, they have what is called a suspect period, and when the bankruptcy takes place, basically one of the first things the trustee in bankruptcy will do, there is a suspect period, which is a period 6 months up to the bankruptcy, and basically, in principle, all the transactions in that period are subject to being undone. So if there was a payment that was made from the business, which was payment for full value in relation to payment of an invoice, even in the 6 month period, if it was a preference that was given to one creditor as opposed to another, that could be undone. So the starting of the bankruptcy is one thing, and going forward, but also going backwards, where the curateur and or the court can look at payments that have been made and can undo them.
The other frequently asked questions, I've got a few of them here. Who owns the responsibility? But I think, Louise, you answer that, because again, it's so nebulous at times, depending on what choices have been made by the director in the end.
That's right. So all the director's actions are going to be looked at closely. Before COVID-19, did the director do everything correctly as a prudent director should do? And once COVID-19 starts, then you're really on the spotlight to make sure
independent directors, because there's so many of those here in Luxembourg.
The thing is, unfortunately, the courts don't distinguish between executive and non-executive directors. Everybody is unfortunately responsible in the same way.
I was going to say, Lisa, that there's no such thing as an independent director. Well, that's not legally, because what happens is in some companies, the certain shareholders, especially in privately held companies, certain shareholders have the right to appoint one or more directors. And those directors then are the representatives of shareholder X or shareholder Y. But legally, they owe their obligation to the company. And the fact that they've been appointed or voted in by one or other shareholder legally is neither here nor there. And the point that Louise is making is that you then have directors who are executive directors who are carrying on the day-to-day business, and others who are keeping an eye on the whole thing. But again, there's not
not actively involved. So you've got a lot of people who, as Graham says, they're not actively involved. They don't really know the details, and they're not interested in the day-to-day details and day-to-day management. They don't pay the salaries, etc. But they are, sorry, I interrupt you, Graham, but they are as responsible. Right. Yes.
And just following on from that, Luxembourg being not enormous in size geographically, it still is the headquarter for many companies without their presence being based here. And I can think of many companies which are not even European companies. So what happens in an instance where a company, let's say in South America, for instance, I can think of a certain company based in Brazil, for example, which has its headquarters here and independent directors here. What would happen if they are coming up against problems, but their headquarters is here? Under which legal system are they going to be?
Well, the same rules apply. I mean, if it's a legal entity here, then that legal entity is subject to Luxembourg company law. within the European Union, you do now have provisions that deal with cross-border liquidations. In fact, I was involved 2 years ago in a case where a Luxembourg company, which had quite a lot of business in Germany, was put into forced liquidation by the German court. And they appointed a liquidator because they actually had a lot of operations in Germany. So, but that's unusual. Cross-border liquidations are an entirely different. But that's where you have one entity which has assets and liabilities in different countries. But I mean, the point that you made before about companies that are maybe not really here. I mean, you're then talking about an extremely sensitive area, sensitive economically and politically, and the so-called maybe letterbox companies or whatever, which of course don't exist.
This is the point at which I'd love to dig a bit deeper.
we maybe have a separate podcast which is about that, but no, there's a huge amount of pressure. I mean, some countries have gone to the extent, which I have to say I think is bizarre, where they actually say, and this is the companies that you normally think of as the so-called offshore centres, where they say, if you're a company here, British Virgin Islands, the Isle of Man, or whatever, you have to do this, and this, otherwise you don't have substance. Well,
well, that's for another day.
Yes. Oh, yeah. No. Then we can have a lot of fun.
We'll have a lot of fun another day, even though this is obviously a super.
I mean, bankruptcy is not a fun subject.
No. And actually, I think what a lot of people feel is that the people who are perhaps responsible don't always pay the price. But these are just emotions. But are there any other frequently asked questions? Again, I've got here. The trends of the banking world here, and what's happening on the banking side now to support or not support. But again, I feel like we're all living in this gray zone right now, and there's so many unknowns. Just in summary, are there any kind of points that you could sew together for us?
The two things that I would say. One is, I think that I think you'd maybe be surprised how supportive creditors can be to companies that are having difficulties. But people don't like surprises. I mean, if you talk to your customers and your suppliers and you say, I'm having difficulties, can I have time to pay? And that is often a very, very good way forward. And you would even have maybe creditors who are willing to delay payment, maybe take less payment, not complete payment. And in the present circumstances, I think there's maybe a lot of goodwill. But of course, your customers and your creditors are suffering as well. You know, their businesses have the same sort of problems. The other thing that I would say, which is really very important, is try and act early. You know, do not. You can be a bit like a rabbit caught in the headlights. You know, you close your mind to things. Yes, it's going to be all right. Get out and get some advice early, and even if it's just from a friend, but someone who can have a less personal view of it, a more objective view.
Louise, some final thoughts from you to just sum it up. I know this is, I mean, there's so many different layers and layers upon detail here, but I think of all the times to gen up on this subject, now is a perfect and very valuable opportunity, because it is just so important. And just from what you were saying, Graham, you're advocating honesty, that honest conversation with stakeholders and creditors. And Louise, final thoughts from you.
Don't forget to recheck some of these government initiatives, because when they first came out, they didn't have all the detail available, and there are little extra initiatives that come out constantly, and it's easy to miss them. So make sure you're constantly checking the government initiatives to see if there's anything you can take advantage of at this difficult time and in the couple of years to come, because there will be changes to the laws, and there will be changes to help businesses to continue and to start up as well. That's really important.
Can I give my vote for one thing? The Chambre de Métier has put forward some proposals for helping businesses, and one of them, which I really love, is the idea that you should be able to go back the last 5 years, and if you've been paying tax in the last 5 years, you should be able to claim some money back from that tax you paid.
That's a very nice idea, and it also shows that you're a substantial and established company with legs. And I suppose just the other side of that is people who started in less than 5 years may be suffering the most and maybe more likely to close, which is always the statistic anyhow.
I mean, all this is said in the context of coronavirus, but I mean, bankruptcies, but with coronavirus, who is going to pay for all this? And that is the taxpayer, not now going forward.
It'll come back to us all, yes.
Yeah, it comes back to us all. And the question is, as usual, is going to be, well, okay, how is it spread over which taxpayers? But again, the money that is being lent now, is being paid now, has to come back. It has to be paid for, and it should be paid for by the taxpayers.
An excellent point. Thank you both so much. I really look forward to working with you again and learning so much from you in the future. I know the next 2 sessions, which are likely to be over Zoom, again, we'll continue this conversation about the really difficult subject of bankruptcy for so many people, whether one is working in a company as a director of a company, sole trader, or an individual. So next time we look at sole traders, and after that we'll look at individuals. Thank you both so much for your very valuable time and your comment and information, but not legal advice.
No. Thank you very much, Lisa. We enjoyed it.
Thank you, Lisa. Thank you.
Thank you.
Bye-bye.
Bye-bye.